Hey guys, welcome back to Sun Crypto. In today's content, I will talk about BTC on a 3D basis, on a 6-hour basis, and also on a daily basis, and what type of price action we could anticipate over the next like a few hours or even like a few days going forward, right? So now, if you've been following Sun Crypto long enough, what I've been saying over the last few weeks or even like a few months since like 2020, what I've been saying was like, as long as we above our 21 EMA, on our 3D basis, right? I won't be panicking. I won't be panicking. There is no need to be panicking, right? The reason for that is like, when you take a look at it right here, we did get a nice dump to the downside, but we understood exactly what was going on. We said it is a what? It is a zigzag right here. If we flip back bullish above the 2D 21 EMA, we're most likely going to be pumping to the upside right there. When BTC was correcting between like a 67 down to 58, what we said was like, we could be in this range. We just don't know how long we're going to be in this range because most of the time you can get like a multiple, different correction, right? So for instance, right there, we created what a flat correction. We're going to talk about the flat correction and all that good stuff. And we could have gotten basically a wedge pattern, like a zigzag formation or whatever type of pattern. So you just don't know. So how long it takes for the price action to breakout, sometimes it is determined by the type of correction. So we just didn't know, right? So as you can see right there, we're creating what a flat correction. Price action retested the 21 EMA on our 3D basis. And what we said was like, let's just be cautious, right? And not, we don't need to be too bearish or extremely bearish. We're just going to respect what we've been saying over the last few months or even like a few years and so on, right? So we're just going to stay bullish, buy the dips and all that good stuff, and most likely price action going to get back above the 21 EMA. Yes, MACD, you could say, hey Sam, you told us if MACD is negative, right? We got to pack our bags and we're most likely going to be dumping. Yes, but you got to remember MACD has to stay negative while price action dipping below the 21 EMA. So you have to have both of them at the same time, not like one of them. For instance, right here, right, if you take a look at it right there, okay, price action was below it, right, below the 21 EMA on our 3D basis, and MACD was continuously bearish. Okay, so that's why we got the dump right here. In this case right there, okay, MACD, it is not continuously bearish because we could basically get a bullish MACD right here. But in order to get a bullish MACD on a 3D basis, it means like price action has to basically break out at least above like a 63 and so on, right? But we will discuss it over the next like a few days. So the takeaway regarding the 3D time frame is like we got to stay above the 3D 21 EMA. We do not want to basically open a candle, right? Open a candle below the 3D 21 and close a candle below the 3D 21, meaning like the same candle has to open and close below the 3D 21. So if we basically avoid that scenario, right, we're most likely going to see some reversal to the upside, right? But now let's go ahead and take a look at the good stuff, right? The good stuff, it is on the 6-hour basis, right? So if you guys recall, one of the best tools, we've been talking about over the last few years is like the 6-hour bullish divergence. You're going to be like, Sen, why not the 4-hour? Because the 4-hour, it is like, it moves very fast and 90% of the traders, they follow the 4-hour time frame, right? So I don't follow the 4-hour time frame. I follow the 6-hour time frame 9 out of 10, right? So as you can see, what we said was like, guys, whenever we get a bullish divergence, okay, both on your MACD and your RSI, bang, you got the deal, okay? It means like price action most likely going to be reversing right there. If we go ahead and take a look at it on, take a look at it on my Discord, right? So as soon as we started creating the pattern, that's exactly what I said right here. Okay, even before the pattern plays out, okay? What we said was like, okay, guys, we just about like a 55 right now, so we're most likely going to be pushing back up to the 6-hour 21 EMA right there, okay? We said 6-hour 21 EMA is dropping lower, and it will be resisting the price action to break out above it, right? And once we hit the 6-hour 21 EMA, bang, it is time to basically get out or at least short the price action down to the down to support area right there. So 6-hour 21 EMA price action got rejected. We dumped all the way down to like a 55.8 up to basically 56.2. That was our average right there. All right. So if you take a look at it right here, I updated it again. I was like, okay, guys, We got our support. We're most likely going to be pushing back up to 59.5, up to basically 60.3. So we nailed the entire correction, right, over the last like a few days and so on, right? So now, if you take a look at it, what can we expect? We know the correction regarding the double top, double bottom is done, right? But most of the time, guys, what I be saying most of the time is like, whenever you get a double top, right, double bottom right here, the correction might be done. Okay, if the correction is done, what can you expect? You got to expect a continuation. You got to expect a continuation. So if that's the case, right, it means, right, we're not out of the woods yet. Okay, it means like we still have to defend, right, support area all the way down to 55.8. We just don't know how low it is going to drop. I'm going to give you guys another a bit over the next like a few days and so on. But we still have to defend 55.8 down to like 56.2 down to like a 55.8 area. It doesn't have to drop that low. It can still drop like 50%, right? It can do something like that and still push to the upside. It doesn't have to. Okay, it doesn't even have to basically drop, but we just have to respect the overall pattern since like it is a double top, double bottom. If you take a look at it right here, right, take a look at it right there. We did get what, a double top, double bottom. If you guys remember the last week of September, what I said was like, guys, pack your bags. We got a double top, double bottom and a triple bottom after that. It means like price action most likely going to be reversing. So if you recall what I said right here, I said exactly bull divergence right here, bull divergence right there. All our moving averages right there, cross bullish. What we need is like our 2D time frame. That's it. Okay. And I said if we get our 2D MACD right there, if we get our 2D MACD to confirm the bullishness by crossing bullish right there, we're most likely going to be going to the moon and all that good stuff. And that's exactly what we did. We pushed to the upside all the way up to like a 65. So if we go back to the 6-hour time frame, right? So we just have to respect what the market is saying. It looks great, but we still have to be cautious. It could be invalidated. Okay, if we get a breakout to the upside and breakout above like a 63, we could easily invalidate the potential retest of the lows and all that good stuff, right? So now let's go ahead and take a look at BTC in terms of fractal, right? So when you take a look at BTC right there, that's what I just showed you, right? This pattern right there, right? Back in late September, that's the same pattern we're getting right now, okay? Or we could create. We don't have to, but we could potentially create it. But if you're a bear, let's say you're extremely bearish on BTC, right? You could be saying, oops, and how about this one? Okay, we could be creating the pattern right there. Okay, that's possible. Okay, that's possible. So I'm basically open to that possibility for BTC to even like a push to the upside and get rejected down. I'm open to that possibility, but it has to basically give us the right idea, right? Why we're going to be dumping to the downside. So now that's when we're going to need our EMAs, right? Because remember, you don't need your EMAs most of the time, right? You just need your EMAs when you need them, right? So if you take a look at our EMAs, right? What I was saying was like right there. Okay, we got our bearish crossover. In the short term, we bearish, but the first crossover right there, right? That's not the initial bearishness. Okay, the initial bearishness, right? Bearishness could be somewhere around here when price action pushes to the upside right there, and we get all our moving averages, 21, 50, right, and 100 right there. Okay, all of them crossing negative again right there. Okay, somewhere around there. Okay, somewhere around this area. Okay, it doesn't have to be exact, right? Then we could be saying like we're most likely going to be getting this pattern right here. Okay, so we can still get this pattern, but I'm still bullish. I got to wait for these moving averages again to cross negative, right? So as of now, I think like bulls are in control. I'm still going to stay bullish till we get like a clear directional move to the downside, right? And all that good stuff, right? All right, guys, that's all I wanted to cover for today. Thanks a lot for watching. If you're new to our content, don't forget to hit the likes. Don't forget to join the public Telegram group link in the description.